Today I will take you through some of the best finance stocks in India, which I believe can lead India's next bull run. And personally, I invest about 60% of my total Indian investments in finance stocks. So I'm a big believer in India's growth story, specifically on Indian finance stocks. And the third stock, I'm especially bullish on it. But why is the case? I will tell you about it as we go on with the video. But before we dive into the stocks themselves, there are two critical points that you need to understand. And these are not just numbers, they are signals. Signals that something big might be happening in the financial sector. Now let me start with the first data point. In October, the US Federal Reserve cut interest rates by 25 basis points, bringing it down to 4%. Now it sounds technical, but the logic is very simple. Lower interest rates means that the bank can give money more easily at cheaper rates. And when loans become cheaper, people borrow more. They buy homes, they expand their businesses. In short, they fuel the consumption. And all of this creates a ripple effect that directly benefits the finance stocks. Second point, and here's where it gets interesting for us in India. In that same October meeting, the RBI did not cut the interest rates. They kept it constant. But here's the thing about central banks. Typically, they lower the interest rates when inflation is under control. And guess what? In October, India recorded its lowest inflation level in recent memory of just 0.25%. Do you see where this is going? If inflation is this low, it is just a matter of time before RBI follows Fed's lead and cuts the interest rates. And when that happens, India's financial sector could see a massive upside. And that is exactly why I am making this video. And that is exactly why I am actively building more and more positions in finance stocks right now. And history has taught us one very clear lesson. When the bull market wave arrives, the finance stocks do not just ride it, they lead it. And do not just take my word for it, look at the data. Now, after the 2020 COVID crash, while Nifty gave a phenomenal 147% returns from its bottom, Bank Nifty gave 175% returns. And during the 2021 recovery, Nifty bounced back by 52%, but Bank Nifty rallied by 80%. So in a bull run, financials outperform. So the question is not whether we should be looking at financial stocks. The question is which ones. So today we are going on a journey across 3 different opportunities. So let's begin. Our first stock is a giant, a fortress. It is the largest NBFC in India. It has probably financed something in your homes right now. Your TV, your AC, your refrigerator. It might be something. I am talking about a consistent compounder that has been making returns for its investors from the last 2 decades. Normally, a large cap company grows its sales at a respectable 8 to 12% a year. But this company has shattered that expectation, growing its sales by 30% and profits by 33% from the last 3 years. So this is a giant that moves like a startup. You might have guessed the stock name by now. It is Bajaj Finance. But I know what you're thinking. Sanika, Bajaj Finance is such a big company. How can it continue to grow at a pace of 15 to 20% annually? See, for that, we need to think like a long-term investor, not a short-term trader. Now, the entire loan market in India is growing at 11%, but the consumer finance segment, where Bajaj Finance is the undisputed king, is growing at 20%. So this is not a short-term trend. It is a long-term consumption story. And for a dominant leader like Bajaj Finance to grow at 20% annually is not just possible, it is a realistic expectation. So how do you build positions in a fortress like this? See, we do not storm the gates when the battle is raging. We wait for moments of peace. See, I would never deploy 100% of my capital near all-time high. I would deploy the 3-part strategy. First, buy a 10% dip. Second, buy at a 20% dip. And if there is a 25% correction, deploy the third part. So we build positions slowly but smartly. And this is the exact approach which we follow in RANGAONE Stability X Growth Model Portfolio, which is a mix of high quality stable compounders along with a select high growth opportunities. And I have started building positions in some of the stocks in this portfolio on the same principles which I was just talking about earlier. So if you want full access to the portfolio and the stocks which we are accumulating, then you can subscribe to the Stability X Growth Model Portfolio on our website rangaone.finance. Now we arrive at a stock which everyone felt is a multi-bagger, but instead it tested the patience of its investors. Jio Financial Services. And many of you have asked me in the comment section that what is my opinion on Jio Finance. See, the fundamentals are good and its September quarterly results were also strong. The sales are up 42% year on year. But the stock price, it has been consolidating in the same price range for 2 years. Why? One number will tell you the entire story. A price to earnings ratio of 123. In simple terms, the market has already priced in years of future growth in the current stock price. So now the company has to deliver spectacular growth just to justify its current valuation. Now, if we take a look at the technicals, I believe that the stock could remain in the consolidation range for at least another year. So the risk of my capital being stuck is too high. So the value zone where I would even consider building positions is between 223 and 246 rupees. And yes, technically it could move up due to some news like it did in the past, but the fundamentals would catch up and the stock would fall down again. But until that level, I am better deploying my capital somewhere else. Now you must be thinking that Sanika, you told us about large cap stocks. Now tell me about a stock that can go 2x from here. See, for such kind of returns, you need to be willing to take more of a calculated risk. And that brings us to our third opportunity, a bank which I believe has the potential to become a giant. So this is one of my top bets and I'm currently sitting on over 50% profits in the stock. But I believe that its journey has just begun. So I am talking about IDFC First Bank. And today HDFC Bank, ICICI Bank are almost 10 to 20 times larger than IDFC First Bank. So my thesis is simple. Can IDFC First, at a current market cap of around 70,000 crores, reach 2 lakh crores in the future? Yes, the financial statements tell the story. And two factors are extremely important while evaluating any banking stock. First, the bank must have a strong CASA base, which is a healthy proportion of current account, saving account deposits. For example, a bank account holder keeps his deposits in IDFC First Bank. So the bank uses the deposits to give out loans, and now loans are given at a 12% interest rate and the bank account holder gets an interest of 6 to 7%. So a good or a high CASA ratio ensures low cost, stable funding for the bank. And if you take a look at the chart or the graph, IDFC First Bank has a strong CASA ratio of 50.1% and it has grown constantly over the last many years. Second, after deploying these deposits in the form of loans, the banks must demonstrate strong asset quality, which means they are able to recover the loans efficiently and maintain low non-performing assets. And in the case of IDFC First Bank, they have steadily improved their NPA numbers over the last few years, showing better recovery and stronger asset quality. So I feel that IDFC First Bank in the long term will grow at a much good rate and make good money for its investors. Now, technically, the stock was weak from the last 2 years, but in the recent months, it has again shown a recovery in its stock price. Now, I had built positions in the stock near 59 rupees and I will build some more positions now near 79 rupees. And this is a high risk, high reward kind of a stock. So do not expect the stock to go up in one direction. So I hope you must have enjoyed my analysis about the finance sector. And as always, if you found this video helpful, then give it a big like, subscribe to RANGAONE Finance. And this was Sanika from RANGAONE Finance. And I will see you very soon in the next one. Till then, bye-bye.